there's no coincidence. I mean, we've become a net importer of gold. The inflows into this country have been off the charts, net importers since November, as we talked about. And the central bank demand has for several years now been what has been pushing the price higher, but something's different here in the United States, no question about it. And it's interesting with all that's flown into COMEX, with the U.S. becoming net importer, with the July deadline for Basel III regulations coming into play. All of these things are interesting with, interview I did with Judy Shelton, where she's talking about issuing 50-year treasuries backed by gold. All of this stuff, Scott Bessent, the Treasury Secretary, when he was running a hedge fund, his largest holding was gold. All of this stuff we keep hearing. And then yesterday, we get a tweet from Trump on Truth Social saying, "The golden rule of negotiating and success, he who has the gold makes the rules. Thank you." He wrote that on April 20th. I think that's a little interesting, what we are seeing right now, to me, more than anything, Ivan, is gold being reintegrated somehow, some way into the monetary system, whether we look at the amount of gold that's been accumulated by the BRICS nations and the admission of their, at least in principle, according to Dilma Rousseff, the former president of Brazil and the head of the New Development Bank, that they've agreed in principle to a settlement currency called the unit, 40% gold-backed, deliverable to central banks on demand, whether the draining of the LBMA to levels that no one's ever seen before, and a massive discrepancy between paper contracts and gold bars available, or whether we see all the stuff coming here in the United States. Something's going on, and it's not like gold is reacting to an event. Instead, it just is quietly I believe, being reintegrated into the monetary system, because not only is the public asleep, Ivan, when you first burst onto the scene, everyone was talking about silver, and now no one can't hear it. No one's talking about gold. Nobody. Yeah. And that's the crazy thing. If you would have told me gold would be at 34.40 and you don't hear or see a damn thing about it anywhere mainstream, hardly at all.
It's crazy.
Yeah, and so that to me tells me that's still very early. It's the central banks that are doing this. It's the big money who's pushing it, but very quietly. I was at the club the other day working out, and at the end of my workout, I always do the elliptical, and normally I'm looking out over a window, but that one was taken, so I'm in front of a big TV, and it's CNBC, and I never watch it. And they got the streaming ticker that goes by, but underneath it, there are boxes that spin every 4, 5, 6 seconds, like the Dow, the NASDAQ, the S&P, the Nikkei, the 10-year treasury yield, all that stuff. And I see gold come up. This was a few days ago when gold was 32.50 or so at its all-time high at that time. And I notice, well, something's weird here. I'm paying attention, and then comes gold again, and I count, and it's 47 spins of the boxes, maybe close to 10 minutes before it shows up again at all-time highs. And I'm counting at the same time. There's 3 boxes that all spin with different indices, and I'm counting at the same time Bitcoin. There are 9 references to Bitcoin in the same 47 spins of that box to the one of gold at all-time highs.
That makes no sense.
Well, it's just either that or it does make sense, one or the other. And I can't quite tell, but if you would have told me at any point in my career that gold would be completely ignored by the mainstream as it's making new highs almost every day, I would say that's just impossible, but it's true. Wow. And so the investing, the retail public has virtually no allocation. Rick Rule just told me the other day, again, 0.5% allocation from Joe and Jane Sixpack to the Harvard Endowment Fund. There's virtually no mainstream retail investment. This is all the biggest money in the world who knows the playbook and is positioning ahead of the realization by the public. But these are strange times, man, completely and totally strange. But yeah, I think something is vastly different with gold. It has strength that I've never seen before. It gets knocked down by $200 a few weeks ago, and here it is way back up again, now at all-time highs in the aftermarket here again, up $10 after being up close to 100 or more earlier today.
Wow.
34.40 basically is where we're at. So yeah, crazy time.
Gold just touched $3,440, an all-time high. And yet, silence, crickets. Not a whisper on CNBC, not a headline on Bloomberg, not a segment on Fox Business. Meanwhile, Bitcoin is down 8% on the week and somehow gets 9 mentions for every single mention of gold on the CNBC ticker. I counted. I was sitting there on the elliptical, watching the ticker cycle through. It took 47 full spins for gold to show up again, at all-time highs. In contrast, Bitcoin was referenced 9 times. That's not just odd, it's intentional. There is a coordinated media blackout on what I believe is the biggest financial story of our generation. Gold isn't just rising, it's being reintegrated into the monetary system, quietly, strategically, and globally. Let's start here. The US is now a net importer of gold. That's not a typo. We haven't seen this since the 1960s. Since November, the inflows into the United States have been absolutely off the charts. We're bringing gold in, not exporting it. And that's a signal. Something under the surface is shifting. You combine that with Basel III implementation deadlines, with the draining of inventories at the LBMA, with explosive delivery volume on CUMEX, with refiners at maximum capacity, and it all starts to make sense. Something major is happening, and it's not just about price. Gold is not reacting to a crisis anymore. It's not a hedge against volatility. It is the transition. I interviewed Judy Shelton recently. For those of you who don't know, she was on Trump's shortlist for the Federal Reserve and has long advocated for a gold-linked dollar. In that interview, she casually mentions 50-year U.S. Treasury bonds that could potentially be backed by gold. That's not speculation. That's someone inside the system tipping her hand. Now add that to the former Treasury Secretary, Scott Bessent. When he ran a hedge fund, his biggest holding was gold. These aren't fringe players. These are insiders. They know the game, and they're positioning. Then you get Trump himself, just a few weeks ago on Truth Social. April 20th. He posts a quote, "The golden rule of negotiating and success. He who has the gold makes the rules." You think that was random? You think that wasn't calculated? Come on, now let's look abroad. The BRICS nations have been accumulating gold hand over fist. We already know about Russia and China, but it's broader than that now. Brazil, India, South Africa, Egypt, Saudi Arabia, they're all getting in on this. And we have confirmation from Dilma Rousseff, the former Brazilian president and now head of the BRICS New Development Bank, that there is a new settlement currency being developed. It's called the unit, and it's reportedly going to be 40% backed by gold, deliverable on demand to central banks. Let that sink in. A new international settlement currency, backed in part by gold, physically deliverable, and available outside the Western financial system. This isn't coming. This is happening. And the West, particularly the US, is still pretending this is a conspiracy theory. Meanwhile, the LBMA's registered inventories are at levels nobody's ever seen before. COMEX is being drained. The physical-to-paper gold ratio is getting completely distorted. You have hundreds of ounces in contracts being traded for every single ounce of gold that can be delivered. That is not a market. That is a powder keg. And here's what's so wild. Retail investors, nowhere to be found. Rick Rule told me just last week that average American investors have a 0.5% allocation to gold. 0.5%. That includes everyone, from Joe and Jane six-pack to endowment funds, pensions, and institutional players. Nobody is in this trade yet. Nobody. So ask yourself, if gold is hitting record highs almost daily and nobody owns it, what happens when they do? That's why I keep saying this isn't a top. This is not a blow-off. This is not a bubble. This is the prelude. It's the biggest money in the world positioning in silence, ahead of the masses, ahead of the headlines, ahead of the chaos. It's what gold always does. It moves first. It doesn't wait for a press release. Now let's talk about the psychology of this moment, because it's just as important as the mechanics. Back in 2010, 2011, people were talking about gold everywhere. You couldn't go to a barbecue without someone asking about silver rounds or Austrian Philharmonics. It was all over cable news, talk radio, even sitcoms. It had entered the culture. But today, at 3,440 gold, total silence. It's eerie. And if you ask me, it's the clearest sign we're still early. When gold gets truly crowded, when CNBC starts running how to buy bullion segments and gold funds start launching daily, you'll know we're in the late innings. But we're not there yet. We're still in the accumulation phase. The central banks are still buying. The ETFs haven't moved. The average investor hasn't even noticed. And that's exactly how the big players want it. Let me give you a quick example. Just a few weeks ago, gold dropped $200 in a matter of days. People thought the run was over, that it was just a speculative pop. But then, it roared right back, stronger than ever. That kind of resilience is not normal. I've been doing this for decades, and I've never seen gold show this kind of strength. Markets usually take time to recover from a hit like that. Not this time. And that tells me there is a buyer underneath this market who doesn't care about price, doesn't care about daily moves. Someone is accumulating, not trading. That's important.
It does have that historical catch-up pattern where it continuously lags behind gold in as gold makes its bull move, but then typically will dramatically catch up and outperform gold on a percentage basis. Anytime you get near 80 to 1, Ivan, it's a sell signal for gold and a buy signal for silver or an exchange. You go back 5,000 years, and the ratio geologically was 16 to 1 for almost all of humanity. And now it's 7 to 1, as Keith Neumeyer will tell you. It's depleting in nature.
Right.
It's found in like your skin is epidermis. It's found in nature in a form called epithermal, right near the surface. Big deposits have been exploited years ago. And so if you have a 16 to 1 geologic ratio for most of human history that has now fallen to 7 to 1 because it is the easy stuff has been scooped up. The price average has been 40-ish to 1 for the last 200 years, largely because of gold's role as money and silver in an industrial capacity. That's man's ratio. God's ratio said 16 to 1, falling to 7 to 1. Man's ratio for the last 200 years has averaged about 42 to 1.
Right.
And now it's 100 plus to 1. This is an opportunity you do not see but 1 or 2 times in an investing career. Look, I'm taking my gold salesman glasses off, and man to man, I would tell you that it's the opportunity of a generation. It truly is. And when you see the amount of concentrated short positions that seem to be unwinding in both London and in COMEX, the United States, because being naked short when there's this kind of global demand coming out of China, who's flying all around the world buying up doré and concentrate, in particular Peru and Latin America, paying double what the West will, sending it back to China for refining as the second largest producer of silver in the world. And
right.
North of 850, 900 million ounces over the last 4 or 5 years, and Russia adding it to their strategic stockpile. I don't ever remember a country doing that. And massive deliveries coming into the U.S. and the FBMA going from T+1 settlement to T+8 weeks because there's a shortage of trucks.
Wow.
Shit's breaking everywhere, and
right.
Things are happening everywhere, Ivan, and these distortions that you see only magnify the final outcome. But anytime in history you go back, you're anywhere near 80 to 1, let alone 100 to 1, you're near that reversal, that catch-up that you speak of. And I would say there are very few times in history, in my lifetime or in anyone investing lifetime, where you can buy something that is that severely depressed based upon historical averages going all the way back, whether it be ratios between gold and silver or just, logic would dictate. Selling at these prices compared to where it was in 1980, I can't think of too many things that you can buy at a 40% discount to its 1980 price that has expanded massively in its uses. Things are breaking, and I think you could argue if you have gold, this is the time to trade it to silver. You don't get opportunities like this very often.
So let's keep going, because this conversation doesn't end at 3,440 gold. That's not a destination. It's a signal flare, a warning, a message to the world that something is unraveling behind the scenes. And gold, as always, is the truth detector. I've been in this industry for over 3 decades, and I've never seen anything like this. Gold doesn't just keep climbing like this while getting ignored. That's not normal. In every past bull market, the headlines would be screaming. You'd see panels debating whether we were headed back to the gold standard. Everyone would be rushing in. Too late, of course, but at least they'd show up. This time, silence. And that silence is not just ignorance, it's strategy. There's a very good reason the media isn't talking about gold's meteoric rise, because if they did, it would draw attention to something they're trying desperately to hide, that the US dollar is quietly being replaced, that we are in real time losing the privilege of being the world's monetary anchor. And that privilege is what allowed us to print, consume, borrow, and dominate for generations. That era is ending. And the people who see it, the sovereign wealth funds, the BRICS nations, the billionaires and multi-generational capital are not wasting time. They're not talking, they're acting. Let's take a moment to consider just how powerful gold has become, not in speculation, but in policy. When Trump posted that golden rule message, he who has the gold makes the rules, on Truth Social on April 20th, that wasn't a joke. That wasn't a motivational quote. That was a signal. He knows. His advisors know. There's a reason Judy Shelton is talking about 50-year Treasury bonds backed by gold. There's a reason Scott Bessent, former Treasury official and hedge fund manager, had gold as his largest holding. These people aren't watching CNBC. They're watching the architecture of the global monetary system get rewritten in real time. And guess what? It's not happening at the Fed. It's happening in Shanghai, in Riyadh, in Moscow, in Brasilia, in Johannesburg. The BRICS nations are leading the charge, but this isn't about BRICS anymore. It's about a global reordering. Let's talk about that for a moment. The idea of a new settlement currency, tentatively called the unit, backed 40% by gold and deliverable on demand to central banks? That's not theory. That's officially acknowledged policy, confirmed by Dilma Rousseff, the president of the New Development Bank. This is real. It's tangible. And it's backed by physical metal, not paper contracts. And what is the U.S. response? Nothing. No acknowledgement, no dialogue, no contingency plan. Instead, we watch Bitcoin ETFs get approved while gold, the only real money for 5,000 years, gets mentioned once every 47 ticker spins on mainstream financial media. It's laughable if it weren't so tragic. Now let me explain what this transition really means. We are moving from a debt-based monetary system, one based on trust, fiat, and political posturing, to an asset-backed system where value must be proven, not promised. Gold isn't just a hedge, it's a reset button, and it's being pushed right now by the world outside the Western financial sphere. Look at Saudi Arabia. They've already accepted yuan for oil. Iran is settling in gold and barter. Russia is fully detached from SWIFT and pricing commodities in rubles and gold. These are not anomalies. These are bricks being pulled out of the wall. And when enough come out, the entire structure collapses. Now let's talk about the psychology, because economic shifts are one thing, but belief is the real force behind every monetary regime. And right now, belief in the US dollar is weakening, slowly at first, then all at once. Do you remember what happened in 2008? Bear Stearns collapsed. People said it was contained. Then Lehman went, then AIG. And suddenly the entire financial world froze. Not because money disappeared, but because trust disappeared. Nobody trusted the collateral. Nobody trusted the counterparties. That's where we are now, but on a sovereign level. The trust is evaporating, and as that happens, gold fills the vacuum. And don't be surprised when you start hearing new phrases like gold settlement windows or commodity-adjusted currency baskets. These are just the early frameworks of a new system, and it won't be optional. It will be forced, because the old system will no longer function. Now, let me pivot to silver, because I truly believe silver is about to go parabolic. Right now, the gold to silver ratio is still hovering above 80-1. That's historic. That's unsustainable. And in every past monetary shift, silver has outperformed gold in percentage terms. It's more volatile, more leveraged, more explosive. And today, it's also more essential. You can't build a solar panel without silver. You can't make EVs, 5G networks, or advanced medical devices without silver. It's in everything. And yet mine supply is shrinking. Scrap supply is drying up. Governments no longer hold strategic silver reserves. COMEX is being drained. We're running out of silver at the exact same time that demand is set to explode. I've spoken with refiners who say they're booked months out. Bullion dealers have wait times again. 1,000-ounce bars, the industrial backbone of the silver market, are getting harder to find. We're seeing premiums quietly tick up, even in the face of declining paper prices. That tells you everything you need to know. The paper price is fiction. The physical price is reality. And when those two finally reconcile, it's going to be violent. People ask me all the time, Andy, when's the right time to buy? And I always give the same answer, before you have to. Because here's what's going to happen. When the reset becomes obvious, when the headlines scream, gold-backed BRICS currency launched, or US dollar devaluation announced, everyone will flood into the market, and they won't care about price. They'll pay whatever it takes. That's when premiums go vertical. That's when product disappears. That's when dealers stop taking orders. And that's when you'll realize the opportunity is gone. Right now, gold and silver are the only assets left that are truly outside the system. They have no counterparty risk. They don't depend on a signature, a network, a regulatory regime, or a central bank. They just exist. They just are. And that's exactly why they're dangerous to the system, because the system thrives on control of money, control of messaging, control of belief. And gold threatens all of that. Silver threatens all of that. So what do? You act. You don't wait for the alarm bell. It's already ringing. You don't wait for permission from CNBC. You don't wait for BlackRock to launch another ETF. You take your wealth out of the system. You get physical, you secure it, you protect it. Because when this next phase hits, it's going to happen fast. Confidence collapses don't follow rules. They don't care about calendars or election cycles. They just snap. And once the panic sets in, it's not just about price, it's about access. The metal disappears. The premiums go nuts. The wait times stretch from weeks to months. You can't hedge a fire after your house is burned down. This is the window, right now. And one final thought, if you think this is all gloom and doom, it's not. It's reality. And reality is a gift, because it allows you to see clearly, to plan, to act, to protect yourself and your family from what's coming. The public may still be asleep, but the smart money is already in motion. And when the world wakes up, when they finally understand what $3,400 actually means, it will be too late. But not for you, because you're ahead of the curve, and now is your chance to stay that way.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.